The falling wedge is a bullish continuation pattern characterized by converging trend lines, where the upper trend line slopes down at a steeper angle than the lower trend line. Traders identify this pattern as a sign of a potential price reversal, indicating a weakening bearish momentum. Once the price breaks above the upper trend line, it confirms a bullish signal, suggesting an upcoming price increase. Remember, the falling wedge pattern can provide valuable insights for traders looking to profit from potential market upswings. We're going to dive deep into the secrets, do's, and don'ts of the falling wedge chart pattern. If you found this video helpful, don't forget to hit the like button and subscribe to our channel for more valuable content like this. The falling wedge pattern is characterized by converging trend lines, with the upper trend line having a steeper slope than the lower trend line. This pattern suggests a weakening bearish momentum and signals a potential price reversal. One of the secrets of the falling wedge pattern lies in volume analysis. As the pattern forms, pay attention to decreasing volume, indicating diminishing selling pressure and potential exhaustion among sellers. This is a sign that buyers might be gaining control. Decisive breakout above the upper trend line confirms the bullish signal. This breakout triggers a potential price increase, as it suggests an increase in buying pressure and a higher probability of a bullish movement. Wait for a confirmed breakout above the upper trend line before entering a bullish position. Patience is key to avoid false signals and increase the probability of success. Consider using additional technical indicators or tools to confirm the bullish signal. Look for supportive indicators like bullish divergence, oversold conditions, or positive news to strengthen the validity of the pattern. Manage your risk by setting stop-loss orders below the lower trend line. This helps protect your position in case of a false breakout or unexpected price reversal. Don't forget to keep an eye on volume during the breakout. Increasing volume during the breakout confirms the bullish sentiment and suggests stronger buying pressure. Don't jump into a trade solely based on the formation of the pattern. Wait for a confirmed breakout and consider other factors like market conditions, news events, and fundamental analysis. Don't neglect risk management. Set realistic profit targets and adjust stop-loss levels as the trade progresses to protect your capital.